The Archer Aviation sell-off continues, but is the sell-off short-sighted? Here to share more about what's going on with this innovative company is MarketBeat analyst Gabriel Osario-Mazilli. Gabriel, there was quite the sell-off that started last week with Archer. Talk about what was kind of behind that.
Right. So over the second week of February, from the 18th up until this week, Archer Aviation dropped by 4 points, which is a significant amount considering it was at 12 on the highs. Now, the reason it's dropping, it's because the company announced a capital raise from Stellantis and other backers up to 400 million, which is a significant share of the company's market cap. Now, this is the same thing that happened with Tesla during the early days, where they needed to ramp up production for the Model 3 in order to commercialize it and really get the benefits of scale and economies of scale. Now, for Archer, we're at the same point where they're getting more and more demand and more orders for the midnight product, but they just don't have the capacity to produce and satisfy this demand. So, by raising capital, investors are looking down the barrel of millions and millions of potential revenue to come, which already shows in the 6 billion plus order book that they just reported over the last quarter.
Now, we've talked about Archer a few different times on this channel and really the whole air taxi movement as well. This kind of race to the skies as these companies are looking to really revolutionize transportation, especially in urban areas. But a lot of consumers, a lot of investors out there still kind of consider this, a sci-fi idea that they haven't actually seen it in action. So people are just waiting to see, is this actually going to happen? But Archer is really very close right now.
That's exactly right. As far as the FAA regulations in the US, they're in phase three, finalizing into phase four. Let me tell you what that means. Phase three is compliance training. So we make sure that it's going to be safe as far as the service. It's not going to have any conflict of interest with any other regulations as far as the air travel service goes. And now they're moving into phase four as far as New York goes. Phase four is the final implementation phase where any day now they could announce that you could go from the Hamptons to Manhattan in about 2 hours, taking the midnight flight service, which fits four passengers, a pilot, plus luggage. Now, that does sound a bit sci fi right now, but you have to understand when these metropolitan areas become so dense, putting a hindrance on ground transportation like the metro or taking a taxi or even an Uber, what is the solution to that? And I think Archer is solving the biggest bottleneck that we're going to see in places like Japan, the UAE, New York, and even LA. So the bigger the problem that you solve, the bigger the reward, which is why you see companies like Uber, Airbnb, Tesla, and now Archer, which revolutionize their underlying industries, get all the benefits down the line.
A great way to look at this company, it's quite the innovator and really has a chance to revolutionize the entire transportation industry. And just like those other companies you mentioned, and many investors look back at those other companies and wish they had gotten in early. I feel like that's a little bit of the story of what's going on with Archer right now.
Yeah, that's exactly it. When you find a company that's looking to revolutionize their industry, there's always going to be some turbulence, just like we saw in Uber and like I mentioned for Tesla. They had a really big issue ramping up production for the Model 3. So cash flow was tight, they needed to raise money. And when shareholders get too short sighted, they're only looking at the volatility, they're looking at the bad news, they're looking at the media, and not really understanding that if the company can get this right, the upside is massive. So, in this way, by raising money to expand their manufacturing capacity, Archer is going to be able to meet all the new demand that's coming for the midnight product. Which, by the way, Japan Airlines just placed an order for over $500 million asking for Archer's midnight vessel. Now, you think about it, they're going to implement it in the most dense metropolitan areas in Japan, like Tokyo. More than that, Archer just signed with the UAE to start commercializing air taxi services as soon as the fourth quarter in 2025. So you can see how it's not only going to be New York, Archer is going to be tapping into the Asian markets and also the Middle East. But do you notice the trend here? They're trying to solve the issue of ground transportation in all of these dense metropolitan areas, just like these other companies we mentioned try to tackle the bottlenecks seen in their respective industries.
Yeah, this global acceptance is a really big deal for Archer to actually see movement happening this year for this company. But there's also a risk for investors getting in early on a company like this that really still does kind of have to prove itself. Some investors have questioned whether the first accident with one of these air taxis could lead to a dramatic, drop in the stock price. Talk about some of the risks that exist in the early stages of a company like this.
Yeah, you're absolutely right. Every time you catch a company in the early stages, their technology hasn't been proven. And people often fall into the recency bias where you don't have a lot of data. Just like airplanes, millions of them fly every single day, but we only focus on the one accident, which probabilistically is not that significant. Now, with Archer, that is a significant risk. If you have one accident out of five flights, that is going to make headlines and it's probably going to be negative for the company. However, they are making an effort to really hone in with the FAA's regulations, the UAE, and Japanese regulations as well. So, given that effort, given that commitment to safety, I think that those risks, as real as they may be, are pretty short sighted given how new the technology is. And anything that's new might scare investors, might scare markets. But at the end of the day, so did Tesla, so did Uber, and so did autonomous driving and AI. Whether you like it or not, that's going to be the way that the world goes. And if you miss out on it, it'll become one of those stocks that you think, oh my gosh, I wish I would have bought 5 years later.
Yeah, speaking of Tesla, any growth investor is looking for that next big company. And we have a list of 7 stocks that could be bigger than Tesla, Nvidia, or Google. Check out that free report by scanning this QR code or clicking the link in the description of this video. Let's talk about the entry point a little bit right now, too. With the recent drop in the last couple of weeks, it really is a low cost of entry, even though there is that risk still present.
Right. So when you talk about market action, it looks like the 750 to 775 level has been an area where willing buyers are coming in and responding aggressively, right? So last time you saw this was November of last year. And what I mean by aggressive is you see the wicks, aggressive wicks in the stock price, right? So we dipped all of last week, and now all of a sudden we see a hard bounce, and now the stock is back above 8. So with that sharp price action, what you're seeing is a lot of momentum buyers, a lot of aggressive buyers, responsive buyers to say the least. And you can see it through the 436 million plus of institutional capital that came in through the last quarter. So as the announcements are made, as the backlog of orders are passing the 6 billion mark for Archer, I think the markets are realizing how valuable this company could become in the following quarters.
Yeah, it has a lot of potential. Still, that risk exists because right now, too, it's still a pre revenue company, correct?
Right. So they do have a lot of orders in the backlog. None of them have been completed because we're still at the phase 4 for the FAA requirements. But phase 4 means any given day now, they might announce the completion in New York or they might announce the completion in the UAE and Japan. Now, if those 6 plus billion of backed revenue orders become realized, consider the company only trades at 4 billion. So that's a 50% upside on your equity since 2 billion increase up to the 6 billion from 4. That's where your upside comes from. So even though it's a pre-revenue company, we are at the brink of realizing all that backlog for orders and then seeing the value realized in the stock, which I think is why all the institutional capital came in through the last quarter.
Yeah, that's a really good point and really a lot of potential upside. Analysts do agree. Let's talk about what the analysts are saying about the future of Archer Aviation.
I do want to touch on the fact that analysts expect over $34 million in revenue for 2025. That's the current expectation, which leads you to the 35% upside based on the consensus price target set up today from Wall Street. And more than that, when you talk about revenue, the company now trades at 230 times forward sales. So just like any other stock, when the market is willing to overpay for it and place a premium on it, that means confidence. That means insiders or whoever has got the information or whoever is closer to the management of the company, they know that this is pretty much a given. Just like when you go to a doctor, you wouldn't go to the cheap doctor, you go to the expensive doctor because you know you're getting the premium service. Markets work the same way. When you overpay for a stock, there's got to be a reason behind it. And based on everything we covered today, the breakout in new markets, the breakout in FAA approval, the breakouts in technology, I think that Archer justifies the premium it trades on today.
It's trading at a premium, but over the last couple of weeks, a lot of investors have gotten kind of a deal or a bargain on this buy. But now we have that hard bounce happening today. Would you still buy on the bounce?
Well, during my time at the banks, I overheard this from a seasoned trader, and it always stuck by me. The big betters always come in late and they come in big. And I think that they were waiting to come in at that 750, 775 level, which is why you see the hard bounce. So are you late? I don't think so. Because consider the 52-week highs are set at the 12th mark. And I don't think markets are going to stop there. Consider the 436 million institutional capital that came in. Consider all the factors we covered today and the momentum starting today. I don't think you're late at all.
All right. Well, thank you so much for giving us a deep dive into Archer Aviation, Gabriel. You can check out some of our other videos that we've done on Archer and Joby Aviation as well. There's a lot going on in the air taxi industry, and we'll continue to follow it all right here on MarketBeat. Thanks again for joining us, everyone. And as always, happy investing.